Welcome to Let's Talk Property, an informal podcast show all about the UK property and mortgage market. I'm Nizam, and joining me is my co-host Lee. Whether you are a seasoned property investor or just starting to think about buying your first home, this podcast is for you. We'll be discussing a range of topics, including the latest market trends, tips for finding the perfect property, and how to secure the best mortgage deal. So join us as we explore the world of property and help you make informed decisions about your next property purchase. So today is Lee's episode. He's going to drive this one forward. Lee, do you want to introduce your topic?
Yeah, this is a big topic, I think, because a lot of people we've dealt with in the past and people that we've helped, and I think it's, admittedly, personally, I think it's more of an older sort of way of looking at things, and it's, should you stay loyal to your bank when buying a property and when remortgaging a property? So we'll look at two avenues, but there's a big emphasis about, I've been with my bank for 10 or 15 years, why would I not go with them for a mortgage? But there's some big consequences when buying property and when remortgaging if you stay loyal to your bank. And this is something that we'll jump into.
Excellent. You haven't answered the question already, have you?
No.
What I was going to say, yeah, I mean, gone are the days where, you know, you get dressed in a suit and you get your tie on, you get your best shoes on, you go and arrange an appointment with a bank manager and you know their first name and they know your kids and all of that.
Yeah.
I think that's probably the days of what a lot of the older generations will know. Whereas I think sort of perhaps the younger generations, and I kind of, well, rightly or wrongly include myself in those generations, we're probably a bit more savvy. We're probably a bit less loyal, aren't we, in terms of that? So I'm looking forward to this one and seeing the sort of pros and cons.
Yeah. I think you're exactly right, and it does stem from maybe an older generation, and you know, putting it out there straight away. You know, staying loyal to your bank does have some good advantages, but it has some mostly bad big disadvantages to buying property. So
Cool.
yeah, looking forward
to
it.
Should we dive in?
Yeah, so just to dive straight in terms of purchases. So if you're looking to buy a home and you're looking to stay loyal with your bank, so it could be that you've been banking with a particular bank for 15 or 16 years and you walk into your current bank. What are the advantages if you were to walk into your current bank when finding a mortgage specifically and you're buying your first home? Well, they already know you. So they've probably got a really good understanding of your circumstances already. They understand your income, they understand your outgoings. They've got a real foothold on your sort of circumstances. So that in a way could give you a head start, you know, in terms of time, in terms of turnaround time. That could really help you when buying a property. They also, I guess, you know how they work as well. So you have some, you know, how in terms of how the bank works, whether they're ethical or not, you know, in terms of their the way they work. And obviously they're your bank for a reason. You've obviously chosen for a reason. There's obviously a preference there. It could be a number of things. It could be the rewards you get. It could be you've got another loan with them, or you've got investments with them, or a current account. So it could be many reasons why you may approach your bank for a mortgage. And ultimately that could give you an advantage. And it could be seen as the bank could see your sort of circumstances and may assess them in a more flexible way, potentially. I'm not saying all banks are like this, but they may be a bit more favorable to someone who's taking you on as a new client as opposed to a new bank. So the big advantages, I guess, initially when buying a home would be the bank already knows you. It could save you a little bit of time, although bank appointments aren't short and they can take time to book in, but it could save you a little bit of time. And also you know how they work, and you have an understanding on terms of what your sort of preferences are with the bank. So it kind of works two ways. The relationship's already there, and it can be seen, and it is seen as the easiest option by most people. So I think the big advantage there would be you already know how they work and you've already got a relationship there.
Yeah, absolutely. I think that's probably I think you've nailed it at the end as well, in terms of most people go to their current bank because that's what they know, that's who they know, and it's the easiest option. They don't have to think about, who's offering the best deal or anything else. It's just, I want the easiest option. I'll go and see my bank. But like I said, that's not always the case, is it? I'm sure you'll come on to.
No. Just to add as an advantage, but this is a rare occasion. It's very small sort of portion of the market where there is a very few amount of banks that do just offer better rates for sort of current mortgage or current account holders, or current sort of, I guess, if you're a current client or customer. We're talking a real small market here, but there are probably a handful of lenders that can sometimes offer more preferential rates if you're an existing client, but we're not talking significant differences, is my understanding. We're not talking sort of 2 or 3% lower than the market or anything like that, because that would be ridiculous, but they may offer preferential rates. So, but I'll be honest, you'll be very fortunate to find a bank that you bank with that would offer a better rate than what's on the market at the moment. I guess I'll jump into the disadvantages, because I'll be honest, there's so many reasons why you shouldn't stay loyal with your bank. And did you know the biggest reason why most people aren't getting the most cost-effective mortgage deal, and the biggest reason why they don't, is because they stay loyal to their bank? So that is the number one reason why people aren't getting the most cost-effective mortgage deal, is because they feel like they should stay loyal to their bank. As opposed to obviously looking at your options on the open market. So if you can imagine bank A, it has 10 products available to you, 10 mortgage products available to you when you go in for your mortgage appointment. And then you may speak with an independent mortgage broker or a mortgage broker, or you do your own research, and the vast amount of options and products for you are completely different. You're talking thousands of products. So if you can think, it's far more likely, with the options that you've got from the open market, so you've got a far more likely chance of getting a better mortgage product than you have with your current bank. So the vast amount of options, the difference in options is huge. And it's the biggest reason why people aren't getting the most cost-effective mortgage deal, is because they're staying loyal.
Yeah, absolutely. And I think it's something I can't quite wrap my head around, is why some people do feel that sense of loyalty to their bank when, especially big banks. And this is somebody who I've worked for a bank, and no bad words to say about them in terms of working for them. But I think in terms of as a customer, you are one of so many people. It's not like we're Peterborough and you used to have Norwich and Peterborough Building Society, and you probably had more of a personal relationship with who was there. They probably had worked there 25, 30 years. So you actually built a proper relationship with them. Whereas in the current nowadays, people don't stick in, a job for more than 2 to 5 years a lot of the time. So again, if you're building you might feel like a sense of loyalty to that particular bank name or company or business or whatever it is. But actually, if the people keep changing in there, then you're not really kind of getting the benefits of those things you were saying earlier. But I think, yeah, absolutely. In terms of getting the best deal, it's a bit like, we often talk about going to one person who only offers one product, or going to the man on the market who offers lots of different products, and including that one product. Then yeah, you're absolutely right. I think for me, I don't see why you wouldn't go to that person who's got kind of compare it all for you.
Yeah, absolutely. I try and put myself in people's shoes, and I guess to talk about difference in mortgage deals, we're talking it could be thousands and thousands of pounds over a mortgage term, or over 2 or 3, 5 years. The difference between going to your bank and finding another bank from all the options, that difference, because this is your mortgage at the end of the day, it's probably it will definitely be your biggest commitment that you'll ever make, and your biggest borrowing. So if you can imagine, the slight difference in mortgage deal can have the biggest impact on you, both monthly and overall, and how much interest you pay. So the vast difference in cost can be huge, just with the smallest change in interest rate. So I think, talking about the difference in deals from a monetary perspective, I can get a slightly better deal elsewhere. That slightly better deal over a long period of time is huge. We're talking thousands of pounds. So it's really important that people understand that. But yeah,
and just to add to that,
go on.
Sorry, Lee. just a really good point. And actually, if you're doing that, if you're only just starting the mortgage, or you've got 25, 30 years, and you're doing that every time, if you're shopping around and getting the best or the most competitive deal for you every time, then actually that has a compounding effect as well. And you're right, you might only save 400 quid there, or £1,500 here or there, or whatever. But actually, if you're doing that throughout your mortgage term, you can become mortgage free quicker as a result.
Yeah,
you?
it's frightening, isn't it? Because you have a mortgage over 20, 30 years, and if you stick with your same bank, I did have a scenario many years ago. It's not quite the same, but I think they ended up paying their mortgage off 12 years earlier or something, or something. They, by going with a bank that they went with. So wow. the difference it can have is huge. Just want to add as well, it may feel like staying with your current bank is the easiest option. Because it feels like it just naturally feels easier because they already know who you are. But you still have to go through the same process. You still have to have that appointment. They still need to understand more about you, get to know you. They still need to submit an application. They still need to assess it. They still need to look at your pay slips, your documents. It's all still the same process. There's no difference, in terms of, the process you have to take. And it's typically still the same timescales. You're not going to get it escalated and prioritized because you're an existing customer, in my opinion. It's just still the same process. So I think for me, if you're looking to buy a home and you're considering buying your first home or your next home, I think things that you really need to consider is just the open market. Don't just think stay with my current bank, it's the easiest option. They're a good bank, so they seem like they offer good interest rates. Even if it's a slight change of interest rate, there can be a huge impact on you financially. So I think as a whole, there's some small advantages, but on this episode, I like keeping balance, but I'll be honest, the disadvantages completely outweigh the advantages to me, in my opinion, on this one. There's no real reason why you shouldn't consider other options. And it may well be your bank might offer the best deal. That's fine. And it might be the best, and that is fine. But in my opinion, the disadvantages, there's a lot more chance of you getting a better deal from another bank than there is your current one.
Yeah.
So,
and sorry, Lee.
I
was just going to say, and it just got me thinking. A really good point, actually, that you kind of alluded to there as well, is it doesn't really matter which bank you end up with because the product is the same. They're lending you money. It's not like car insurance where, okay, you want to shop around every year, but you also want to make sure that you're getting good cover or, life, critical illness cover, income protection, all that sort of stuff. It's not about the product varies. Therefore, that bank is going to offer a more better product than this building society. You're just lending you money. So all of the differences is how much you're paying them back. So actually, if you're swapping every time, and you're locking in that most competitive deal available to you, compare that with staying with loyal to your bank. There's no benefit. There's no added benefit or very few added benefits of staying loyal to your bank because ultimately you're still making the mortgage payments. You're still borrowing the same money. So,
yeah, absolutely. Just one more disadvantage to add to the purchase part, and we'll go on to remortgages. If you stay loyal to your bank, they might not necessarily be the best bank for you for your circumstances as well. This is a big one when trying to find a mortgage. So if you could think, I'm just trying to plot sort of scenarios out. If you're self-employed or if you're NHS staff or if you're a first-time buyer, they might not be favourable for particular schemes, the way they assess your income. I don't want to dive too much into it, but they could be completely the wrong bank for you based on sort of your circumstances, because every single bank is different and they assess things very differently. And some banks are more favourable to self-employed. Some just don't agree with self-employed, and they're really sort of strict on their criteria. Or same with NHS staff, and same if you're a first-time buyer. So, really quick one. It's likely out of one bank or 50 or 70 or whatever banks, it's a lot more likely that on this side, you're going to have a bank that's sort of more suited to your sort of way of living and your employment and everything else. That's my final one for purchase. Remortgage, it's a little bit of a different ball game with remortgaging. Effectively, the biggest reason why you'd remortgage your home is to find a better mortgage or find a new mortgage deal or a new interest rate. That's kind of the biggest, it's probably the top reason why people remortgage their home. Admittedly, a lot of the time, the easiest option, and there's no doubt that this is the easiest option, is to stick with your current lender. If you're already a homeowner and your mortgage deal is coming to the end, is stick with your current lender, because there's no assessment generally needed. They just say they offer you a new product, typically 6 months before, and you kind of pick one. You get a letter and you kind of pick one from 5 or 6 products or whatever that may be. They may call you for a chat and they may kind of say, which one do you want? The service is quite limited in my understanding. So, which is great because that is really easy. You just pick a new product and off you go. You've got a new mortgage product. Really, really easy. Probably only takes, 10, 15 minutes on a phone or something. However, on the flip side, you could remortgage to another bank. Again, the same disadvantages and advantages apply to the purchase. How do you know that mortgage deal is the best mortgage deal if you're staying with your current lender? And I would say most of the time, and a lot of the time, it's probably better to review your options from the market, and you're more likely to get a better deal. And again, it's going back to that loyalty. And Nizam, you mentioned if you just keep staying with the same bank and you're not reviewing your options, it's exactly the same for a remortgage as it is for a purchase. So, albeit, yes, the staying with your lender is an easier option, in my opinion, but moving to another bank could save you more money. Admittedly, remortgaging to another lender can cost money in fees. There is some legal fees. There could be a mortgage broker fee. It could be a product fee. There's more, could potentially be more fees. But what you would do is you would take that all into account and you would look at what's more cost effective over a period of time. So I think, if you're listening to this and you think, I'm just going to stay with my bank still remortgaging, again, you really seriously need to consider your options from the open market. Exactly the same again, you could be paying, thousands of pounds more than you need to when remortgaging your home.
Fantastic. I think that's really clear. There's some really clear points there, Lee.
Good. I think if I was to kind of do an overview, I think it is just review your options. It could be that your bank may be the best for you, and that there's no denying that. But you really need to consider other options. Don't just stick with your current bank. It's definitely not the easiest option when purchasing. It's pretty much the same. Remortgaging may be a different argument, but again, you could save a lot of money looking elsewhere. Hopefully that's
it. And I think that's brilliant. And I think the point you're making there is really clear in that you're not saying never stick with your bank. You're just saying if you don't look across the market, you won't know if your bank is going to be the best or the most suitable or most competitive lender for you. Therefore, all you need to do is just ask that question, speak to a broker, do that work yourself if you would rather. But just make sure that you are looking at more than just your own lender and not just walk into your bank and going, they're the only ones that will give me a mortgage, and taking their word for it. And a really, really, really good point to add as well is, like you said, about they may not be the most suitable for your circumstances. Lenders will lend different amounts to different people, or to the same people, I should say. So, you could walk into 5 different banks on the high street and walk out with 5 different bits of paper with different numbers on them in terms of what they lend you. So that can be the difference between having to compromise and settle for a property you liked, but it wasn't quite the dream home. Whereas there might be a lender down the road that will lend you what you need for your dream home. So again, when you talk about circumstances, that's a really good point to kind of just highlight what you said there around that.
Yeah, spot on. I guess if you decline the mortgage from your bank, doesn't mean you'll be declined elsewhere. Just because you're their current sort of mortgage holder or current account holder, absolutely, doesn't mean you'll get declined elsewhere. So
no, absolutely not.
Cool. I tried to keep it to 15 minutes, well over, but never mind.
Sorry, I probably bulked out there.
No, you're good, mate.
We're both passionate.
Cool, brilliant. So I'm just gonna finish off. So thank you for joining us for this episode of Let's Talk Property. We hope you found the discussion of the UK property market informative and helpful. If you have any questions or topics you'd like us to cover in future episodes, feel free to send us a message. Don't forget to subscribe to the show and follow us on social media for updates on future episodes. Until next time, we'll see you in the property market.
Property market. Yes, that's definitely the best one.